let's review the different type of fees when we're processing a receipt, and also the different type of payment methods. These are receipts for monthly payments, for balances, for endorsements, and also for new business applications. So if we select the arrow under the invoice item, we're going to review the different type of items. Now, agency fee, this is technically our broker's fee. This is the amount that we're charging to start a policy, the activation, the down payment, the deposit. This is our fee. Balance due. Balance due is technically an amount that the customer owes to family insurance. EFT to company is the minimum that the insurance company requires to start a policy, or the amount for the monthly payment. So this amount is deducted from family insurance's bank account. So this amount has to match exactly the receipt, the confirmation number from the receipt, or the confirmation from the company's receipt if it's a new business application. Endorsement fee, it's always $100. This is a fee for modifying the policy, for adding vehicles, adding drivers, or adding coverages. Late fee, insured's refund, we really don't use this option. Late fee is a $20 late fee, and this only applies to a balance that they owe family insurance. So it's not a balance towards, or a late fee towards a monthly payment. It's only a late fee added to the balance that they owe family insurance. Processing fee, this is a category that we choose for the $10 processing fee when we're processing a payment. Now, for payment method, we only use a couple. We use cash, debit, and money order. So technically, those are the three options that we use. We use cash, debit, and money order. Those are the three payment methods that we use. So let me give you a quick example. Now, there's three different categories, or three different sections when we talk about processing processing a receipt. Now, and this is what I want you to follow. This is more of a formula. So if you're doing a monthly payment, okay, when you're processing a monthly payment, there's two items or two type of fees that we use. Number one is always going to be EFT to company. Now, the monthly payment is going to be under the EFT to company. So that's going to be based on the actual monthly payment that they owe. Now, the second type of fee would be, or the second item will be processing fee. So every time you process a monthly payment, these are the only two items or only two fees that you should see on your receipt. So let's just create one as an example. Let's assume that the monthly payment is $120. The processing fee will be $10. So once again, EFT to company and processing fee. So for every single monthly payment, these are the two items that you have to choose. Now, for payment method, you could always choose cash, debit, or money order. The two most common ones are cash and debit. So you press cash. You need to make sure that the total tender matches the total invoice. Now, the second formula, if it's a new business application, you're going to have two items as well, EFT to company and agency fee. So once again, the processing fee is only for monthly payments. Now, if you're processing a new application, you're always going to select EFT to company. You're going to make sure that submission matches with the amount on the agency's receipt, which it prints with the application. you're going to have to do the math. You're going to grab the total. So 390 the total. Let's assume that the submission is 270 with 30 cents. So what you're going to do is you're going to subtract submission from the total. So 270, 30 cents, this is submission. You're going to subtract that from the 390. So that's a total of 119 with 70 cents. So this would be your agency fee. This is your submission, and this is the total. So the way you're going to transfer that information into the receipt, you already have the EFT, which is submission, 270 with 30 cents. Now you're going to choose agency fee, and you're going to add the 119 with 70 cents into the next section. So agency fee, 119 with 70 cents, and it's going to give you the total, which is 390. So if you can see, it matches. 390 is the total. That's what you have for total invoice. Submission is 270 with 30 cents, which is under the EFT to company, and your agency fee of 119 with 70 cents. Now, let me just show you, just in case they do a split payment. Let's assume that they pay $200 cash, and they do the rest debit. You could split the total in two different payment methods. So you could do cash and you could do debit. The most important thing is to confirm that you're processing the information correctly. You have to make sure you count the cash. You have to make sure that you process the debit transaction before you complete the receipt. So double, triple check your receipt. Now, that's for a new business application. Now, once again, for a monthly payment, you're going to have EFT to company and processing fee. And $10 is the fee across the board for every single monthly payment. For a new business application, you're going to have EFT to company, and you're going to have the agency fee. Now, there's two other categories: endorsement fee, so endo fee. The endo fee is always $100. So you really don't have to choose anything else. So let's remove all of this. So if you ever process an endorsement, just select endorsement fee. Under the amount, you're going to type the 100, and then just choose a payment method. Let's say cash. Cash 100. So just double check everything. So for the endorsement is always going to be the $100. Now, let's review a balance. Now, if the customer has a balance and the balance is already on the system, when you go to payment, it's gonna open up the invoice window, and it's gonna show that there's a balance of $90. So it's very easy. All you need to do is just press OK. Don't touch the invoice item section. Leave it alone, because it's already it already has the invoice and the invoice number, and it has a balance of 90. So literally all you need to do is just collect the balance, collect the invoice, either cash or debit, and then just process the confirmation. Always select three receipts, and then that's how you process a balance when the invoice is already registered under the Hawksoft. Now, let me open up the payment again, payment option. Now, if the customer has a balance, but for one reason or another, the balance does not show up under the invoice, all you have to do is just select the balance due. So invoice and balance due mean the same thing. They fall under the same category. So you're going to select balance due, and you're just going to type in the amount that they owe, and then just choose a payment method and process the payment. So once again, invoice and balance due mean the same thing. So there's 4 different sections. Monthly payments, you're always going to choose EFT to company, and you're always going to choose processing fee, which is always $10. For a new business application, you're always going to choose EFT to company, agency fee. Now, to calculate the agency fee, you're going to determine what the total amount is, which in this case is $390. You're going to determine how much submission is. In this case, it's $270 with 30 cents. Now, what you're going to do is you're going to subtract the $390. So $390 minus $270 with 30 cents, and it's going to give you a calculation of $119 with 70 cents, which that technically would become your agency fee. So once again, submission for the receipt would be $270 with 30 cents, and your agency fee would be the $119 with 70 cents. Now there's also the endo fee, which is always $100, and also keep in mind that a balance means the same thing as an invoice. So, and for the invoice, just in case the payment is late and there's notes on the system that the $20 payment should be added, then all you do is just go to the late payment option, add $20, which is always going to be $20, and it gives you the total of $110. And then you could select the payment method that you're going to use. So late fee is always $20. Now, once again, keep in mind, the late fee only applies towards the balance that the customer owes family insurance, not towards a monthly payment.